Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
After the ECB cut its interest rates by just 10 basis points, so basically nothing. You see it at 0.5. I mean, there was like little to no actual movement on it. And if we go there was an expectation of a much larger cut. The research 1.045, its highest level since November after the decision, and then Draghi started talking, and it just fell down. The euro was rallying against the dollar because the expectations were just way too elevated. And so when it came on out and everything happened, the dollar also hit a low against the yen. So it was down, and they cut on the low end of expectations. But again, of course, we're going to see that dollar surge a little bit more, of course, if they decide to go ahead and raise interest rates. If they don't, you're going to be able to ride that and have some great trades. So volatility is fully back in play, and we got a whole lot more coming. We were talking about this yesterday. Be ready for the volatility today, and it was a day to bank. And I hope you have banked today. All right, stay right there. We'll be back right after this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Alrighty, folks. Welcome on back here to the Diagnostic Trading Hour. And going in and checking things out, looking at where everything is right now. One of the things we're doing is looking at just the news stories, the big news stories on the euro dollar. And let me go, I'll bring a chart on over. We'll check that out. And we talked about there being a lot of volatility there. I also talked about the Dow getting slammed yesterday on Tommy's show. And we just had a beautiful, this perfect looking trend happen right there on the Dow again. And just doing exactly what we called yesterday on the show. Let's go back. We'll look at the announcement. And it did surge up. Dollar got hit a little bit more than expected. But we did expect the euro to get stronger. But, it was just 10 basis points. It wasn't massive. And we can go back and let's see here. Let's pull. Right there, 8:30 a.m. And we go over here, look at 8:30 right when the report came out. Wasn't just a massive climb. We climbed from 0.7 to 1.5 deviations right there. And we did it rather fast. So it wasn't just a nice smooth trend right there, but moved on up. And it gave a couple entries along the way. So, we had plenty of scalps and some potential trend trades involved in that as well. And if we're going over, moved on up a little bit more, and just sitting right up on that 1.5 deviation level, just bounced off the 1 deviation, bounced right on back up, and not doing a whole lot more at the moment. But, anyways, give you plenty of trades, like I said, for you to hop in on and be a part of with this. And I've been just pretty impressed about how all the pieces have fit together on trading over here and for the day. And just like I said, it's been a beautiful, beautiful thing. We got the DAX right here. I'll bring that out for you. Obviously, that's a good one to trade when things like this happen, and you can trade the DAX on Nadex. And you go over just right now, we just had an awesome short come on over here, had a couple possible entries coming right there off a red eye zone going short. You had a swing breakout where it came down, pulled up, and then broke through it again. So you had a swing breakout, which is a nice, easy scalp trade. But then right there, you had your breakout of 2 to 3 ticks within a couple bars. And right there it goes down. You go short. Everything's red. Trend flip is red. Trend catcher is red. Eye zones are red. Bars are red. It's just take the short right off the red eye zone. And so you go when you go short. And by the way, you have another swing breakout whenever it pulls back, also known as an elevator, when it's only 1 bar right there. And it flies on down, 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 down. Another swing bar elevator there, swing bar elevator, going down, 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 and trending right down to this point, and it's showing out right now. So not a whole lot happening, but, volume way under normal right here in the afternoon. We picked up a little bit just now. Let's go ahead and check out what happened earlier this morning on the DAX when all the hype came out with the euro, and it's like the DAX didn't even care. Like I said, in Germany over there, they're paying right now. They're paying interest just to put money in the bank. So so instead of getting 1% or whatever, that banks are paying out, you're literally having to receive it. Instead of receiving 1%, you're having to pay 1%. So that's very nice of the banks. It's like they're saying, please don't give us your money. A little bit different for banks, but plenty of trades this morning, and just going through and reviewing. I mean, right here we have, let's see, a swing breakout right there. We're going on down here. We got a nice little trend trade. Didn't capture a whole lot, but we got 40 points. So that's really, I guess that's not bad. That's pretty decent. And scrolling on over, trying to find a trade to see a little bit of a swing breakout there. Trend trade right there. We actually caught that one. And we're able to trail that one up and grab about 40 points to the upside. And I mean, that's just this morning, 40 points. Bam. So, this one right here, this one would have been a little bit of a loss. And that one would have been break even on the trade. So 40 points, maybe lose a couple points, break even. And then a nice profit right there. Grab another 20 or 30. And if you, depending upon the rules you follow, you could actually follow it a little bit further. Going on down, got another entry. This one would be more of just a scalp trade. And then finally over here, which is a beautiful thing, we finally established an institutional zone at this point. We did throughout here when it was just oscillating. But when everything finally lined up, right there, then we grabbed that big trade right there. You're talking, a solid 75, 80 points. Let's see, about 60 points right down here. So from 1185 down to 1125. So another fantastic trade. And technically that one is still in. You're still riding it out. So, and it's still moving down. So we could pick up quite a bit more. So 65 easily locked in and still going. That's the DAX. So that's some of the best movement we've had in a while, and clear trends. And one of my favorite instruments to trade. It's in there in my top 5. And Nasdaq is on up there as well. So, and the euro dollar, I trade it off and on. So I trade it whenever there's something happening to make the euro move. So I love it. And same thing with the dollar yen. The euro is moving, the yen's moving usually, and vice versa. So if one of those things has somebody talking, then they can be great. Then, Nasdaq and Russell, and then dollar index. That's my top 5 right there. And then I'll branch out. I'll look at S&P and Dow, and I'll look over at oil and gold, and things like that. Speaking of the dollar index, let's check out a dollar index chart. Let's see where it's at. We're still going to have to cover the news. I want to make sure you have the plan for the rest of the week, but there's not too much left in the week to have to worry about. But dollar index, if we go on back, it didn't have near as much movement as I would have expected. It blew way past it last night and came on down. You see that settlement and then just that drop. And this right here, is, we're looking at, well, there's more than I thought. I guess it just it's all early in the morning. I was like, where did all the movement go? But yeah, so there's our movement right there. And let's check this out. We blew past 3. We're more like at 4 or 5 deviations on the day. That's our dollar index. And it's like I need to plot out a whole bunch of additional deviation levels and things like that happen. But it's such a rare thing. But again, what we talked about yesterday on Tommy O'Brien's show in the afternoon, I was on there, and we talked about how we were expecting explosive moves, and a lot of that was going to be in the dollar. And if you look at them, these are just moves that are flying, and really the only way you're going to catch stuff like this is you have to change things up because they're so sharp, they're so fast that you have to be willing just to go with the flow. We talked about that. And to me, that would mean, like, as soon as I see red or green bars, I'm just going to go with them. I have all my bars. I have a little code built in that changes it based on the color of the trend. It doesn't matter the color, the direction of the bar. And it may get you in a few bars late, but there's definitely, that's pretty much about the only way I can see you can trade this because it moved so fast. And it was bouncing right off everything. And so much stuff was lining up. But it would have been a little harder to catch these today with confidence on the dollar index because the moves were so large. And eventually things slowed down a little bit. And what's sort of cool is you were able to actually catch this. There's one that you were able to catch this morning at 8:30. And because things slowed down right here and gave you a chance to breathe for a second because it was just flying. I mean, up and down 2-3 deviations in a matter of 3 minutes. Or even a minute. I mean, that right here, like this move this is 8:33 in like 7 seconds to 8:33 in 31 seconds. That's 20 seconds. So reality is you're not catching that, even if you got the perfect everything. And then 8:33 in 31 seconds to, look at that, 8:33 and it's still 2 seconds. That's a 2-second move that the DX traveled almost 3 deviations. So you're not catching this. You know, as beautiful as it looks on the chart, it didn't end up in your hands. You're wanting to, but you're, man. And then all of a sudden over here, things, like I said, slow down a little bit and let you catch your breath. They're still moving pretty good. And, I mean, you had about 10 seconds to grab this trade. So there was enough time where everything was lining up. If you grab that, the only imperfect thing is you feel like, should I take it? I'm going into a 3 deviation level, and there's no eye zone in my place. Everything else is lining up. If you grab that, knowing that, hey, at least I should be able to go down to the next institutional zone over here, you take that in, boom, it hits that zone, but it goes on through it, blows through it, and, captures a ton of money right there. So some good solid trades. I'm just trying to find. I mean, this was literally like riding a wild bull today. This thing was either going to, either you were going to stay on and you were going to ride it right for the 8 seconds, or it was going to stomp you. And let's see here. Here's another one. Here's another good little trade. But again, didn't have a chance to even form zones. It was moving so fast today. And it's been going. So it's one of those things you better be ready if you're going to trade dollar index whenever Draghi talks, because the market does not always like what he says. Let's see, going on over here and looking at this. Says Draghi disappoints and the stock markets are hammered. Bernanke would have never let down the stock market. The DAX was down 3%. French CAC was down 3%. Spain down 1.87. Italy's main market was down 1.9. The UK down 1.9. And we have our markets. They're pretty much down a deviation move on the Russell, the S&P, and the NASDAQ. Dow still only down about half a deviation. So it's not moving as far as the other ones in proportion. Looking on over, just trying to see if we can see anything special on them. But I know we had some really nice trades here on the NASDAQ. And all right, so right there, I mean, it's the beautiful short that just came up on 11:30. And, I mean, it had multiple entries, but right there off of the short eye zone, perfect short entry, and able to ride that down, hits that, set your stop a few ticks above. Even if you got out right there, which wouldn't have been a bad choice, then you got another short right after that on the breakout, which is also swing breakout, but it flies on down. It continues and continues and continues. And I mean, you're talking about literally grabbing. I mean, this is pretty insane, but going in and grabbing about 50 points off of one trade this afternoon on the NASDAQ. So the market really letting off steam right there. And you got to just love that. That's where the big money is. So I know I enjoyed my morning. I hope you enjoyed yours. All right, so that catches us up, just doing some chart review time, and we can keep going. I mean, there's so many charts to look at. I guess I'll do one more. We'll look at oil, see how oil's looking this morning. And there we go. So on oil, let's see here. It pulls back. We get a bunch of setups. Let's see if this one, that's going into a little bit of a red eye zone. So that really is going against the rules. We had plenty of institutional, not institutional, but breakouts, swing breakouts happening constantly. And so even on those, I mean, you're grabbing $100 there, $100 there, $100 there, $100 there, another $100 just now. So, I mean, you grab easily $500 or so on this move. I mean, it was a big move, though. So it's one that, I've been a little bit upset to not be able to grab everything on it. Because, the move was literally, about a 1180 move. But you could easily get about almost half of that just by doing swing breakouts itself in out of the trade. But some nice big moves this afternoon in oil on a Thursday. So everything just flying around at the moment. And like I said, giving you plenty of opportunities to go in and take advantage of this volatility that we have been waiting for. And I talked about this. I said, hey, you need to really, really get in there and be ready to take advantage of the volatility, because there's going to be a lot of volatility today, and I said tomorrow. And then, of course, week after next on the 15th, whenever Yellen comes out and gives the new interest rate, which she's been testifying today. So, of course, I'm sure that's adding to that volatility. And we can see, just what some of the, top news stories are at the moment. But yield curve and the Fed, starting to move around. 5 ECB officials didn't back the decision today. So that shows that there was obviously a lot of disagreement going on. And so, there's just a lot happening. Let's go over here and let's check out what we got on news right now that is coming up. Let's check out our news trading plan for the week. The main one is going to be the U.S. unemployment claims. And so we're going to talk about expected moves on that when we get back. Stay there. We'll be back right after this.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And looking on over here, we usually do iron condors. Be very cautious on the movement, but even with Draghi's movement and talk today, this stuff would have worked. So, look at the pricing, and if a straddle works better, do a straddle, but be very, very aware of what is coming on. Most of the movement happens off the NFP happens in the first 15 minutes. So often I get as much time as I can get. Like I even go for 3 p.m. contracts. So the spreads will be wider at 7 a.m., meaning the floor to ceiling, not the bid offer spread, but the floor to ceiling of the spread. And looking over here, we got let's see, what are we looking at? We're looking at Aussie dollar. Usually has 60. We're looking for $60 of premium to receive as an iron condor. That's buying the lower spread, selling the upper spread. And that's usually a 6-pip move. We're looking for 50 pips. So usually it pops up, pulls back. Okay? Euro, 100 pips. Usually pops up, pulls back on 60 pips. Pound dollar, 100 pips. Usually pops up, pulls back on 70. Okay? So meaning we're looking for a 100-pip move, but 60 pips on euro dollar. We're looking for a 100-pip move on pound dollar, but 70 pips on pound dollar. We're looking for a 75-pip move, but 60 pips on the dollar CAD. Looking for a 92-pip dollar franc move, the 60-pip premium on that, and an 80-pip, okay, an 80-pip move on the dollar yen with a 62-pip move there. So the straddles, know that these are ranges expected with minimum profit pips. So if you can pull off a straddle again for a 1-to-1 of that expected move, like if you can go in and you look at how much it's going to cost you, and then it has to move basically all of your risk. So if let's say it's going to cost you 50 pips or 60 pips or 70 pips, or it's going to cost you, say, 50 pips, you're going to have to make 50 pips plus 25 pips, okay, to cover the loss of the other side. Let's say one side was 25, the other side was 25. All your risk plus the risk of the other side. So say if both sides have 25 pips, you're risking 75. You have to be able to make 75 pips to make 50, because you're going to lose 25 on one side, most likely, unless it just zigzags huge and you hit profits. But don't count on that. So you need a 75-pip move from where you bought it, okay? Which would mean, okay, if I get it for 50 and I got to make the extra 25, that's 75 pips, then I bought it 25 pips above the market because that was a 25-pip cost on a straddle. It means it's higher. There's premium in there. Then basically I need a 100-pip move to be able to cover a 50-pip risk. And that's setting my profit right at the 100-pip move. So, and when you do this, make sure you're looking at deviation levels so you set your take profits. Like if it's right on the line of a deviation or a little above a deviation, then you may not go for an exact 1-to-1. But those are circumstances when you could look at potentially a 1-to-1 trade. And you can, these are, I would say if you're going for the straddle, they're definitely not set and forget. Put them on and then be ready to trail them if you need to hit that instant order on the scanner to be able to hop out of the trade. And let's see here. Going in and looking at straddles, we got these are the ranges expected, minimum profits. So if you can pull up a straddle taking profit for 1-to-1 from the market price up to the expected move for 9, 10, or 3 o'clock. So again, first 15 minutes is when most of that move happens. All right, have fun, be safe, control your risk, be profitable. Y'all have a great day, and I will talk to you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.